Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Bhutra, and these are the top stories 1:30 p.m. this Monday morning. Stocks continue to slip as growth concerns come center stage. Energy IT leads the decline while industrials stay resilient. Midcaps fare better.
The government rolls back export levies on a bunch of iron and steel products, cheering industry. Godavari Power and Ispat gains 15%. The company's management tells CNBC-TV18 that 70% of volumes came from exports before the duty came into force. JSPL's management says it is a good move for the steelmaker and it will resume exports.
Five-star Business Finance recovers after a tepid listing. The management tells CNBC-TV18 its assets under management have almost grown to 6,000 crore rupees. Archean Chemical Industries makes a good debut. Shares list at an over 10% premium to its issue price of 407.
Select mid-caps like Ease My Trip and IEX surge ahead of their board meetings this week. Ease My Trip will consider a bonus issue on Wednesday, and later this week, IEX will discuss a buyback plan.
Escorts Kubota surges on a positive midterm guidance while Zomato shares slide after another high-profile exit hits the food delivery giant.
All right, those are the top headlines that we are tracking on Midcap Radar today. With that, let's do one thing. Let's welcome Himanshu Gupta, the VP Research at Globe Capital, for a technical check on the markets. The markets are under a lot of pressure with the Nifty, which is declining 160 points. There is Bank Nifty, which is the one which is putting some pressure, but still outperforming the benchmark indices, and the mid-cap side of things looking slightly better than what the benchmarks are indicating. That one is down around 0.1%, but the advanced decline ratio is in favor of the declines as we speak. So good time to get a technical check on the markets. As I said, let's welcome Himanshu Gupta. Himanshu, good afternoon. Thanks a lot for joining us. Well, what are the charts suggesting now?
Very good afternoon to you. Well, I think this is just a consolidation as I see on the immediate short-term charts on Nifty and Nifty Bank. So there was a huge gap, if you see the Nifty chart, around this 18,100 zone, which I think is likely to hold on and offer a decent support for the index. I think another dip of 30-40 points and we are close to 18,100, which as per me remains a very strong support zone for now. And I would be looking to go long there with a 50-point stop loss. And on the upside, I think a rebound towards 18,300, 350 in a day or two can be seen. So I think I would be looking to go long at the lower end of this trading zone. Similarly, Nifty Bank, although the mood has been weak so far, but we have seen some kind of strong buying in a handful of bank stocks, be it PSU banks or an Axis or ICICI Bank. So I think here also 42,100, 42,000 remains a very strong support zone. Initiating along levels around those levels is recommended. Keep a stop loss below 41,900. And on the upside, I think 41,500, 42,500, 42,600 kind of level can be expected here as well.
Okay, what about individual stocks?
Yeah, so I'm going with a couple of buy recommendations which are looking strong to me. And I think once this consolidation is over, these stocks can actually give very strong breakout on the upside. The first one is a buy on Axis Bank. The stock has been very strong on the charts, and we have been seeing, despite a weaker broader markets today, we have seen some kind of buying coming in here. So Axis Bank is a buy for a target price of 885, 890, stop loss below 858 for a short-term trade. Second one is a buy on Hindustan Aeronautics, HAL. Again, a very strong breakout, very strong performance and very good derivatives data also. So HAL is a buy around current levels of 2650. Keep a stop loss below 2620 and the targets close to 2720, 2750 can be seen in today's trade.
All right. Okay, Himanshu, thank you so much for taking us through your technical picks. With that, let's move on to our segment, Mid-Cap Movers. We have Vivek, as always, with us to take us through the mid-caps that are moving around in trade. Vivek.
Well, good afternoon. Quite a few mid-cap stocks today buzzing on good volumes, and you're seeing quite a bit of strong positive price action as far as, the Nifty 500 itself is concerned. Clearly, in the Nifty 500, you're seeing more gainers. Some stocks on the radar, Skipper Limited, after a very long time, the management actually held an analyst con call. They've uploaded the con call transcript to the exchanges, and today the stock is poised at the upper circuit. Dish TV, now this particular stock, after a while, has seen a strong up move. Quite a bit of triggers as far as analysts are concerned. They're saying that an upcoming IPO in the similar space is something that could lead to a valuation re-rating. Some of the other stocks today that have hit the volume parameters, Finolex Cables, this particular stock again after a while has seen very sharp up move. Vadilal Industries, some SME stocks in this particular space have done very well, and Vadilal too is seeing a rub-off effect. Kirloskar Industries, now in this particular group, most of the stocks have seen quite a sharp up move in the last month or so, and Kirloskar today has done very well at a fresh 52-week high. Coming to the list of stocks in a 52-week high, most of them are the banking space, Bank of India, Bank of Maharashtra, J&K Bank, PNB, all of them continue their up move and today at a fresh 52-week high. On the other hand, some of the stocks that continue to see quite a bit of decline, especially in, today at a fresh 52-week low, Green Panel Industries, Rupa and Company, this particular stock has seen quite a sharp slipper from recent highs. Sona, it's the recent listing, while it's up above the IPO price, stock has seen a sharp correction from recent highs, and Voltas continues a fall after a weak set of results.
All right, that is the list of stocks that are buzzing in trade. In the mid-cap space, Cabra Extrusions also is soaring around 17%. They recently put out a press release where they speak about how Batrix has inked with Hero Electric for the electric two-wheeler range. It is for basically battery packs. The stock is up 17%. They are in partnership with Hero for this particular contract, and Hero has basically entered into a contract with Batrix. So the company says that this partnership will lead to growth in their EV segment, where they are getting into lithium-ion batteries as well. So that's about Cabra Extrusions. For now, we'll slip into a break now. We'll connect with MK Dhanuka, who's MD at Dhanuka Agritech, to discuss their business outlook. Stay tuned. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Dhanuka Agritech, that is the stock which is on our radar today. General business outlook is what we would like to understand from the company, and the stock has spiked to the day's high as well. MK Dhanuka, the MD of the company, is joining us now. Mr. Dhanuka, good afternoon. Thanks a lot for joining us. Well, quarter two is away, and now we are halfway into quarter three as well. Can you give us a sense of how demand has been, especially on the domestic front? Because you did indicate earlier that domestic demand was undergoing some sort of headwinds. Are you seeing some recovery here?
Because of the moisture in the soil and the dams are full of water, the Rabi sowing is higher in comparison to last year, and that's why it is expected that Rabi season should remain good and there should be good demand. However, the season is little bit delayed, so some sales has been postponed for the next month. So November sales has been postponed to December month. So that's why there is possibility that third quarter some sales may be postponed to fourth quarter. But overall, the season should remain good, and we do hope that, as per guidance, we are going to deliver double-digit growth by year-end.
End of deferment of sales that we've seen in October as well as half of November, sir?
It's reasonably good, and as I said, told some delay is there.
Yes, sir. So just wanted to understand the quantum of delay in terms of sales or in terms of volumes.
No, volumes and value-wise, the sales are okay. Only some sales has been postponed, so 2-3% there is a decline in comparison to what we have planned. So we do hope that we will cover up in the month of December.
All right, so that will be covered in the month of December, and overall FY23 will be a year of double-digit growth for the company. You gave us an outlook on the domestic markets. In your recent press release, you spoke about receiving queries from international markets for your current portfolio. So can you give us a sense of, yes, export is minuscule, but what is the current contribution of exports to overall revenues? And with the inquiries coming in, do you expect them to convert it in FY24? How much can exports scale up to for the company?
You see, till now, company was doing export only to Nepal and Bangladesh. But now we have established a full-fledged export department. And since Dhanuka is now entering into technical grade pesticide manufacturing, so the export opportunity will be much more in comparison to the formulation exports. So that's why we have recently started. It is at nurturing stage. It will take time for this department to basically have good volumes, but definitely inquiry has started coming. And in next year onwards, we hope that around 5% of the business should come from the export segment.
Okay, so FY24 export contribution to the revenue should be close to about 5%, right?
Yeah.
Okay. Could you tell us a little bit more about the high cost inventory, because your gross margins have been subdued for the last couple of quarters because you were sitting on high cost inventory. Hasn't been completely wound down, and what is the outlook on gross margin, sir?
So you see, it's a declining trend in the industry. The prices went very high. Some of the molecules, the prices increase was more than 50%, and even in some of the molecules, it was even up to 100%. So such a huge rise is not basically accepted by the farmers, and gradually now the prices are coming down because of the sluggish demand and the easy availability of the raw materials. So that's why in reducing prices trend, there are always pressure on margins, because you have in system high cost inventory and you have to sell your stocks at the market prices, which are lower because of the reduced raw material cost. So that's why the pressure on margin will be there even in the third quarter.
Okay, so pressure on margins because you're sitting on high cost inventory, but the selling price is reduced now. So that could be the reason why margins will be under pressure. Can you give us a sense of how much have prices fallen from the peak, both for the output and for the input as well?
Depends from product to product.
Yes, on an average, sir. On an average, if you can tell us, maybe 10%, 20%, there is a fall. How much?
On an average, 7 to 8% price fall is there.
Okay, on the raw material side as well?
Yeah, both the side, because every month we change our price list according to increase or decrease in the prices of raw materials. So accordingly, we pass on the same to the customer.
Understood. So do you expect this decline to continue considering the demand situation that we are looking at, or now that you're saying Rabi season is looking good, there is a scope of taking further price hikes?
No, because Europe, there was drought-like conditions, so exports are not happening to Europe. So that's why the availability from China is easy, because still a lot of imports are happening from China, and China is the biggest manufacturer of agrochemicals. So that's why due to easy availability, the price declining is happening even right now. So we hope that this trend will continue till March 2023.
Okay. So just getting back to that Dahej plant, it's going to get commissioned in March of 2023. What is the expected initial utilization, and can you talk about how you expect the utilization to improve over what period of time?
You see, in the first phase, we are putting up the first multi-purpose plant for manufacturing of synthetic pyrethroids. So that will be complete. But the other plants, we are looking for tie-up with the multinational companies. So it will take some time to streamline the revenues from the Dahej plant. Initially, only we expect that from the Dahej plant, only synthetic pyrethroid sales will happen from the one multi-purpose plant. But there are possibilities of putting up the 9 plants over there. So rest of the plants we will be putting up, having a joint venture, and we are now discussing to get the technology for some new molecules. For that, we will establish the new plant over there.
All right, Mr. Dhanuka, it was a pleasure speaking with you. Thanks a lot for joining us, explaining the current business situation and also the industry situation. So that's about Dhanuka Agritech. Q3 will see some spillover of revenues, but FY23 double-digit revenue growth guidance remains. With that, we'll slip into a break now. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Officer's Choice Whisky maker Allied Blenders and Distillers filed its DRHP for a 2,000 crore IPO earlier this year. My colleague Yash Jain spoke to Bikram Basu, VP Marketing and Strategy of the company, about the public issue, the plans going ahead, as well as the business outlook. Listen in.
So around 700 crores out of the 1,000 crores goes into prepayment and repayment of debt.
Okay.
The balance goes into several different corporate purposes. could be for some work on backward integration, capacity expansion, in terms of brand building and growth. So that's what the balance corpus is kept for.
When we speak about the other part, the balance part of the proceeds, do you plan to use some of it towards inorganic growth strategy as well? I mean, how are you looking at that part?
Yes, that's always an opportunity. You know, organic growth and is obviously part of what we do, plus inorganic growth is something. If an opportunity, good opportunity comes our way, we'll be happy to consider those things.
There are a couple of reports, and I have to ask you this thing, since we're talking about inorganic growth, which suggests that you are in fact looking at 3 brands when it comes to bringing them in the family of allied blenders. Help me understand how close, how far are you with respect to having these 3 brands under your umbrella, and how soon do you expect something to come up here?
So, you know, when you're in a state like ours, where we expect some more work to be done and some inorganic growth, you do explorations, and we are just at an exploratory stage for this.
A large segment of the product portfolio that you have caters to the mass segment. What is your idea in terms of how premiumization would come in the portfolio of the company? Would it be through acquisition of brands, new brands, premium brands that you bring in, or would it be introducing products in-house which are more premium and they sort of add to the premium portfolio?
So mostly the plan is to grow and build our own brands, while we are very strong in the mass premium segment with Officer's Choice and ABD. We have done really well with the brand which we launched 5 years back, Sterling Reserve, and we've launched 2 new brands, Srishti and XNO, which in the past 2 months, which are all in the semi-premium to the premium categories. And we want to scale up the business in terms of premiumization, and we will participate stronger in those spaces.
How soon do you think can you go back to your pre-COVID revenue, which was about 8,900 crore rupees seen back in FY19?
So if you look at, you know, we did get affected by COVID. We are no exception to that, and that shows in our results. If I see the current year trend also, and what we are projecting, and part of what we've stated, is that we should be back to pre-COVID levels, and we should be fine on that count completely.
In the current financial year?
Yeah. In terms of volume growth, which would, you know, you can take it to a revenue line on that, we are expecting a high single-digit growth ahead of the industry, and we are launching semi-premium to premium products, so that starts getting its play. So we should be better off on that count.
The company currently has high single-digit margins, but whereas the other 2 listed companies, your peers, have somewhere mid to high double-digit margins. What is your plan in terms of growing, expanding your margins going forward, and how do you do that? What is the number that you see on this front as you move towards premiumization?
So that's the thing. We have to build a Sterling Reserve range to a far stronger equity. We have launched in more premium places, and we see the margins growing over a period of time. So we should be in a much better space and closer to the 2 listed companies.
All right, that's the word coming in from Allied Blenders and Distilleries. For now, that is all we have on this edition of Midcap Radar. Do stay tuned. Inside Out is back and comes up next.